Welcome to Charts Today. My name's David Linton, and today's edition for Friday, the 21st of December, comes to you from London. And we see a sea of red again in the markets, not looking good in the run up to Christmas today, the last full trading day before Christmas Day. So we're seeing the dollar actually is still bearish, despite that Federal Reserve interest rate rise this week. It's just not enough to raise the dollar, and forward guidance is now less interest rate rises in the future. So we're seeing the market not pricing that in, but interestingly, and that's on economic weakness, which is what's starting to spook the markets. And we're seeing the China-US tensions still there, and that's having an impact as well. The euro is actually down against the dollar, says euro-dollar chart, but it is actually bullish on the short-term chart. The long-term and medium charts still are pretty bearish and do favor the dollar. Against the yen, the dollar is weaker. And interestingly, we've broken down here, and that's quite interesting. Just that sudden fall through the cloud on the medium-term chart, and even on the long-term chart, we are seeing dollar weakness starting to creep in. So that's the first time in quite a long time that we've seen the yen dominating. That's also the yen is a safe haven, and that's where a lot of funds are flowing to. Sterling is actually up against that weaker dollar, although medium and long term still bearish. Against the euro, it's up again, but still bearish on all three time frames against the euro. So, and more talk this morning of a no-deal Brexit, which obviously isn't good for the currency. Against the Swiss franc, sterling is lower, and against the Aussie dollar, actually sterling performing quite well. Bitcoin down a further 1.4%. It's hard to believe that Bitcoin was nudging $20,000 this time a year ago, and now we're languishing at 4,000. The U.S. stock market was down 1.5% on the S&P 500 index last night. That's making new multi-month lows. We're back to levels seen in September last year. A terrible week for the markets. This is the week really that we broke down out of that range. And interestingly, looking at the lagging line here on the weekly chart, we are just at a level where we're entering bearish territory long term. So market actually looking weak. And looking at the year in summary, we were at a new all-time high in January. We fell away quite sharply in the first quarter of the year. We rose to make a slightly higher high, not enough of a higher high to be convinced, but it's this lower low where we've actually really now entered, Dow theory would say, into a new downtrend, and this long-term trend is now looking under strain. And of course, short term, we've got a very bearish looking chart. Downside targets still sitting here of around 3 to 4% downside, 5%, 2.5%, 5%, and then 12% on the long term chart. It's all downside targets on the long term now. The short-term upside targets being unwound. Looking at the Nasdaq, similar picture, of course. Not quite as bearish on the long-term chart, although the price is coming through. The lagging line has more work to do to come bearish, and also, just looking back at that S&P chart, we'd want to see 3 weeks of the lagging line below the cloud to be fully bearish, but the picture is not looking good. The Dow, a similar picture. So we do see more downside potential for markets. And the Russell 2000, the broader based index, that's very, very clearly bearish now. So this is a market breadth indicator in itself. The fact that the smaller cap stocks are falling more heavily it just tells us that we've got big falls here. 6%, 7% downside, 3 and 4%. So it's really quite a bearish picture. Now we often do get a relief rally at Christmas. And especially between Christmas and New Year, but the Santa rally, hard to see it kicking in with markets looking like this, I must say. So if that does materialize, you'll notice upside targets on the shorter term charts first. The S&P 500 future is down 0.5%, and the Nasdaq E-mini down a further 2/3, suggesting the US market will open lower still. We might see some bear closing, given that there's been a lot of selling. We might see some closing of short positions, which would lead to a rise in the market. But overall, the trend is very much down on these medium and short-term charts. The Footsie 100 index is down 0.2% this morning. It's been bearish for a while on the long-term chart, and we don't have any clear downside targets really for Footsie. That's really interesting. So it's really hard to call the bottom for the UK market at the moment. But the interesting thing is it's just bearish on all three time frames, and certainly no upside targets. Mid caps, we do have some downside targets. These thrusts have been produced from the sell-offs. We've got 20% and around 2.5% further to fall on mid-caps. So there's no signs yet that you'd buy this market at the moment. The DAX is off this morning, just under 0.5%, so nudging new lows here. Interestingly, looking back on the DAX, we're making 2-year lows now on the DAX. So Europe in a much worse state. On the Footsie, we're also making 2-year lows. So that's the interesting thing, is the US is not quite as bearish in terms of making those 2-year lows, but it is just showing through in Europe. We've got downside potential of 6%, 10%, 7%. Lots of downside targets. Really does imply we can go lower. And the CAC 40 is also falling away. This was probably the strongest looking European market at the start of the year, but nothing has managed to buck the trend, really. Japan was down 1.8% on that weaker yen on the 400 index. The Hang Seng bucked the market and was up 0.5%, but that long-term chart now looking very worrying for the Hang Seng. China down a further 0.8%. And we've been making multi-year lows, 4-year lows on China, and we still have all these the multiple downside targets for China. Still a big worry, and that's the one we've talked about all year. We've been worried about China. The Sensex index was down 1.65%. So it hasn't managed to buck the trend, and the Aussie market was down 0.7%. So we really are seeing that. Brent Crude has seen a little bit of a relief. It had a terrible week though. There's the weekly candle, and we see here on the daily chart that we're just again making new lows. Brent normally has a stronger Q1. It heads into the what is used to be known as the summer driving season, where the first part of the year it goes up towards there. So we may see a recovery at some point, but it's really hard to call the bottom just yet. And again, WTI looking bearish, teetering along the bottom there as well. And we're seeing this week, again, after a few weeks of just really trying to find support, we've broken that support and we've fallen away. So that is bearish. Some very scary downside targets for crude oil. US nat gas holding on at $3.62. It's been very volatile the last several weeks, but breaking back down, and we have downside targets here, so it's not looking bullish. It's looked like it made a top. Will it find support? That's the big question. Gold was up sharply yesterday. It's down very slightly this morning, but this is one of the more bullish looking charts. Bullish on the short term, bullish on the medium term. Long term has work to do still, but we've got upside targets. And interestingly, we've got 1302. That target's been in place since October. 1295 is the new target. That's suggesting a further 3% higher for gold. And if we break that $13 level, $1,300 level, it will be very interesting, because once we break this $1,350 level on gold, we're away. We're then looking at these big upside targets, and with everything that's happening in the world at the moment, that's quite conceivable. Silver, not quite as bullish as gold, not quite through on the medium-term chart, but still looking pretty good. US 10-year yields are sinking much lower, 2.79%, and interestingly, we unwound that 4% upside target. We've still got the 3.8% target, but again, we're now at risk of unwinding that. So we're seeing a real change in sentiment towards US bond yields. This data all coming to you from Thomson Reuters Icon, or if you're a private user, Metastock. It's the same system, and they're really brilliant for the breadth of data. For the stocks, I'm actually using Yahoo Finance as a free data source. It's a really great system, and here we see all the markets. So we can see the Nikkei, for example, was down 1.1% that week. That stronger yen having an impact. Japan turning bearish there. This is it relative to the Dow Jones index. This chart here sets everything at 100 at the start of the year. So this year we've seen Japan underperform by 5%, and we've still got downside targets. So it is looking quite weak. The on-balance volume for Japan, interestingly, just implying that maybe a lot of this selling is not volume driven, more sentiment driven. It's an interesting chart, especially when we get to stocks. Taking a look at the Nasdaq. Just US tech has been the big driver. If we look at Google, we're down. We were down 1 and a bit percent yesterday. This has been one of the more bearish charts in the medium term for some time. Relative to the market, actually has been falling not as much, which is why the relative chart's increasing. So if you bought Google shares, you're no worse off than the Dow Jones this year, maybe 2% better off. If we look at Amazon, Amazon was down 2.3%. Normally, Amazon is running in the run up to the Christmas period, and we still have 35% outperformance on Amazon on the Dow Jones this year. So as tech stocks goes, Amazon has still been one of the better performers. Apple down 2.5%, and we've really seen their outperformance fall away to nothing. So having been 30% outperformance just over a month ago, we're now back to parity with the Dow. So that's been quite a fall from grace for Apple. Taking a look at Facebook, they were up slightly yesterday, but boy oh boy, this stock's had a terrible year, and it's one of the few that is long-term bearish on the Ichimoku chart. This is my weekly, this is my daily, that's my medium term. We've got downside targets on the 1% chart, so we really are seeing quite a fall there. Looking at some of the other bellwethers, Microsoft was down 2%. It's still holding on to its relative performance, outperforming the market by 25% this year. Netflix was down 2%, so we've seen a bit of a fall there. And Tesla was down a massive 5%, giving up a lot of their performance. They've performed very strongly to come back ahead of the Dow this year, ending up not much better off, and a very choppy market for Tesla if we look at that long-term chart. So looking less good there. Taking a look at the Aussie market overnight, just ranking by performance, there were still some good stocks. We saw Resolute was up 6%. Chart looks abysmal. Healthscope Limited, they were up 5.8%. They look a little bit better. Northern Star Resources, one of the better looking charts, really nudging new highs and upside targets. These are the sorts of charts to look for. 30% outperformance on the Dow this year, so really powerful. Looking at the downside, we had Orocoba down as quite sharply there, and Filbra Mining, they were lower, really just falling away. Terrible week for them, looking at that weekly chart. And Vocus Group, also we're just seeing heading lower. China, we saw a handful of stocks up. The big fallers, stocks still down 4 and 5%, and again looking very bearish. Downside targets there. Hang Seng was actually up, so we had more green stocks than most other markets, and that's really showing through. Hang up 5%, but the chart's still looking bearish, and that's the interesting thing. Even though we're seeing a lot of these big performances, we are bearish. The fallers, Sono Land was down 2.6%. Actually, the irony is the fallers are looking a little bit better than the risers. The Nifty 50 in India, we had Hindustan Petroleum. They're holding on, but might be just making a bit of a recovery. But it's been a tough week there. And looking at the downside, Indian oil on the other side was down 5%. India Bulls, we've seen them in the leaderboard or the laggard board each day, down 3%. Wipro holding on to its bullish trend, Wipro, so performing relatively well, although flat on the edge. Just the last few months that we've seen that improved performance. And Tokyo, of course, we saw a lot of stocks down. TDK bucking the trend up 4%, but still a bearish chart. And Family Mart down 6%. Ironically, still a bullish chart. So we're seeing those counter trend moves really weighing heavily there. Looking over to Europe, we start by looking at the Footsie 100 index, just ranking the Footsie by performance. Just Eat had a terrible year. They're actually up 5% this morning, but still a very bearish looking chart, underperforming the market some 22%. Antofagasta up 2.4%. Ocado, we're seeing some stocks performing quite well this morning, but it's the chart that really counts, of course. course, Royal Mail have had a terrible year this year, and we're still bearish there. Looking at the worst performers, we've got Vodafone down 1.7%. DCC also lower. Some of these are just turning on their relatives, so we might start to see some improvement. That's the place to watch for it, any improvement in relative performance. The FTSE 250, if we look here, JD Sports is up quite sharply, up 5.8%, but still just teetering on the edge here. Maybe we're finding some support. Still outperformed the market this year, but at one point it was 45% outperformance. That's been given up now to just 5% outperformance against the Dow Jones Index. Countryside Properties, they're up 3%, and if we look at the other end of the scale, we've got Kia Group down 4%. So they've really tumbled in the last few months, and that's a real fall for grace from them, and they've underperformed the market by some 63%. So that's really a terrible performance for Kia Group this year. Hilco Pharmaceuticals, actually their relative chart looking good, more than 50% outperformance. So even though they're down today, they have done relatively well. And Stagecoach jumps this morning, so it jumped this week, but actually we've now seeing that fall away again. So the trend catches up with these stocks again, and here we see the real-time pricing coming in from Yahoo. Looking at the Euro Stock 600, we've got Delivery Hero in Germany up 10%. Just Eat we talked about. SPI's SA in Paris, they're up, but that chart is terrible again, underperforming the market almost by half. GAM Holdings had a terrible year, and again sinking lower. That's in Switzerland. Taking a look at the other end of the scale, we've got SES in Paris. They're down 4.5%. Galapagos in Amsterdam down 4.2%, and Altros Europe down 4%. So we are still seeing some pretty big falls here. Jyske Bank in Denmark down 4% and looking worrying there as well. So that's it for today. The last full trading day of the year. Doesn't look like we're going to have a brilliant Christmas rally, and it's just a case of waiting for this market to bottom out really, and there's no signs that it's doing it yet. Until next year, happy charting. See you then.